Hey, what's going on, guys? It's Henry back with a video on how to make more money trading options. I'm going to get straight to the point. I'm going to just tell you how I made $4,000 with a smaller portfolio. So obviously my portfolio is bigger, but I'm trading small amounts of money inside of my portfolio and I'm tracking everything in a spreadsheet. That spreadsheet's in my Discord community where everyone else can follow, and I'm fully transparent, 100%. So what I'm doing is I'm running this interesting strategy, which I believe that you have to copy because this strategy has been literally printing money, and it's been printing money for me on positions like Tesla. So you can see here I have 294, $500 gained, 845, $400. I have this position actually open on other things like Coinbase. I have it on Airbnb, as you can see here. Anyways, I counted up all the gains and losses and I'm up $4,000, and I'm only trading a few $1,000s. So being up $4,000 is ridiculous. So again, pay attention in this video, stick throughout the whole video, because if you're gonna skip around, you're not gonna get the results. But if you want the results, I'm about to get you some results. All you have to do, you don't even have to smash the like button. I appreciate it if you do, but honestly, just pay attention, okay? So the first thing that I'm gonna show you is call credit spreads, okay? With this strategy, you can literally make money regardless of where the market is, regardless how big your portfolio is. If you just have a couple $1,000s and you wanna grow it, I literally believe that call credit spreads are gonna get you there, because essentially, spreads are a fantastic way to grow a small portfolio. Spreads is actually how I grew my portfolio from the very beginning, because I didn't have a lot of money. I started with like 2 grand and I wanted to grow, and I was like, hey, I don't want to work 9 to 5 anymore. What do I do? And it didn't happen overnight, but by using spreads, I was able to collect a lot of money and not put up that much money up front. And back in 2020, when Tesla was rising and I was using put credit spreads on Tesla, I was basically making like 10 to 12% a month. And that's actually what I'm doing again. I'm doing really well on this collateral right here, although my portfolio as a whole isn't growing because the market is crazy. I mean, don't get me wrong. If I go to the 1 month, I think I've grown my portfolio pretty well. Yeah, 4%, pretty good, especially because the market's pretty volatile. I'm very hedged right now. But anyways, let's jump into Coinbase. So basically, here, let me show you this trade from scratch, okay? I'm pretty bearish on Coinbase. I think that cryptocurrencies, FTX, I never promoted them, which, oh my God, I can't believe it. Every other YouTuber promoted them, and I think that's why this YouTube channel is doing so well right now, because I'm the only guy that didn't have any sponsorships. I never take sponsorships because I hate having them. I don't believe I should put any sponsors in front of you guys unless I fully believe in them. And because I was always skeptical of cryptocurrencies, I never did that. And lo and behold, look what happened. Everything blew up. So anyways, Coinbase, I am still bearish on because I'm pretty bearish on cryptocurrencies in general. And I've been bearish because essentially because I have a degree in finance, analytics, economics, and accounting. I have so many degrees when I went to college. Because I have an education, my professors basically taught me to analyze a stock. I'm going to look at the fundamentals. I'm going to look at the technicals, okay? And when I look at the fundamentals and technicals, I can say, hey, this company has cash flow. Like, for example, Starbucks, they're actually selling coffee. People are actually drinking the coffee. People actually like the coffee. People don't like that Starbucks basically can't get their name right, they can't spell it right, but at least the product itself is pretty good, or at least the experience is good enough for people to keep coming back, right? Maybe that coffee tastes a little bit burnt. What do you think? I don't know. Maybe some of you guys like Dunkin' Donuts better, or maybe you like to make 20-cent iced coffee by yourself at home. But anyways, people actually go to Starbucks and they spend money. So when I look at the cash flow, when I look at the balance sheet, when I look at the income statement, I'm like, okay, this company's worth something. But when I look at crypto, there is no cash flow. No cash flow. It's basically whatever someone else will pay for it. So what is it worth? Well, I don't know. As much as someone else is willing to pay for it, just like gold, okay? Some people love gold, right? In India, people like really love gold. In other countries, they don't like gold as much. In US, it's kind of in the middle, right? Some people have gold bars, but honestly, most people don't, right? So it really depends on the country. So what is gold worth? Well, it's a commodity. It's just worth whatever the price is globally, what people are willing to pay for it. Okay, but that's kind of like a question mark. I don't really know what it's worth because I can't assess its cash flow. But when I look at companies like stocks, I can actually understand that this company is overvalued based on like price to earnings or price to sales ratios or different ratios, right? Here, Coinbase doesn't have any price to earnings because, hey, this stock isn't that good. It doesn't have any earnings. It's losing money, okay? So this stock was trading at a 52-week high of 290, and many YouTubers were pushing this stock at 290, and I've never had it. If we look at my history, actually, you know what? I'm super transparent. Rather than like talking at you, I'm just going to show you, okay? I hate when people like tell you, do this, do that. I'm just going to show you. That's why I share my screen and share my account, even though it's sometimes uncomfortable. But as you can see here, I've just been doing call credit spreads. I ended up selling at 119, put options, made money there, Iron Condor. Made money there. Actually, no, I lost money on this Iron Condor. It looks like I lost about $300, which is not a big deal. I did not blow up my account on Coinbase, and as you can see, I've been doing call credit spreads a lot. Anyways, without wasting too much time, let's go into Coinbase. I'm actually going to show you how to make money, okay? Coinbase call credit spreads. And the reason for it, again, is because this stock is in bearish territory. Look at it, the 3 months, okay? It's negative 35.9%, okay? People are blowing up their money. People are very upset. But guess what? You can actually make money even when the stock is going down, and you don't need a lot of money to do it. So as you can see here, both of these positions have actually made me money. The reason why this says 0 means that it's fully decayed. So whatever I sold this option for, this spread for, it's fully decayed, and I made all my money. As you can see, $395 gained, and my collateral is $6,500. So super small account friendly. If you have a few $1,000s, well, you can make a few $100s in just a week. So actually, I opened up this position 12.9 and 12.16 very recently during my live trading call. Let's see, I opened it up on November 28th and then November 28th. Okay, so November 28th. So it's been about 2 weeks, which is pretty good because 240, actually, let's look at this position before I fully show you the example. So this is a $400 spread, okay? I did 10 of them, so this is $4,000 and I made 240. That's about a 6% return. And this is in about 2 weeks. So in 2 weeks, 6%. That means in 1 month, it's about 12%, which is exactly what I told you in the beginning of this video. I was making like 12% returns month over month for like a whole year back in 2020, which absolutely skyrocketed my account because I more than doubled it. And I went to almost $1 million by the end of 2020. And then in 2021, I passed the 7-figure amount. So I'm going to show you how to do this on Coinbase, but I'm also going to show you my other positions on Airbnb and Tesla because I think you can really benefit. Okay, no matter what size account you have, small, medium, big, doesn't really matter. My Discord community helps everyone. I really specialize in small accounts because that's just naturally where everyone is. If you're a millionaire, you probably don't really need me. You probably already know what you're doing. And if you have a small account, then you're trying to grow it. So that's kind of where I specialize, and medium accounts as well, because there's a lot of medium accounts out there that want to get to the large account mark and they're trying to do it themselves. They're not as consistent, and that's what I'm here for. So sell call. Okay, I'm going to go from not December 9th. That would be tomorrow, okay? Now, here's a piece of advice. You don't really want to trade very short-term options. You can. Sometimes I do sell 0 DTE put credit spreads. In fact, if you want to see a video on that, just let me know. I can show you how to do that on QQQ and SPY. But honestly, typically I'm selling like 2 weeks out, maybe 2 to 3 weeks out, okay? So here, I'm just gonna go out until actually January 20. No, actually January 6. That's about 30 days out, okay? 1 month option, 4 weeks, 2 to 4 weeks is perfect, okay? So I'm gonna go to sell call option. Okay, I'm bearish on Coinbase, but that doesn't mean, just because I'm bearish and I don't think this is an amazing stock, it still doesn't mean that I'm gonna sell a call option at just 43, right? Because that's also not that smart. So, just because you're bearish on a company or you don't think it's going to rise that much, doesn't mean that the stock can't have short-term volatility and end up spiking up in price in the short term, and that could really hurt you. So instead, what I'm going to do is, I don't want to go 43, because if I expand this option, check it out. It has a, bid and ask is pretty good, okay? This is a good option to trade, okay? But check it out, the delta is 0.54, meaning that I'm going to lose 54% of the time if I end up selling this option. That's not that good, that's not safe, and that's not consistent. Instead, I'm going to go out of the money. So I'm going to go up. I'm going to keep going up. I like to look at chance of profit on Robinhood, but I'll have a link for you in Robinhood below. Not that I like promoting anyone else or having any affiliates, but so many people keep asking me what brokerage am I using, so I'll just add it for you in the description. But it doesn't matter what brokerage you use because it's basically like a vehicle. It takes you from point A to point B. I don't care if you're using Robinhood or Webull or TD Ameritrade or really anything, interactive brokers. It doesn't matter. Okay, I'm teaching you the skills to make money, guys. You're going to be loaded with cash if you follow the logic, the skills, the way I trade, the technicals that I'm using, the fundamentals that I'm using, everything that I teach. If you're watching my videos, you're going to get wealthy. but it doesn't really matter what brokerage you use. That's totally up to you, okay? So I'm gonna go up and I like to see about 85, 88%. So let's see this. Let's see this option right here. If I expand it, 53, 25 delta, that's still a little bit high for me, okay? That's still kind of too close. 25, that means about 1 out of 4 times I'm gonna lose. So I wanna go up a little bit more. Let's look at this, 21%. Oh, that's pretty good, okay? So that's about me winning 4 out of 5 times, and 1 out of 5 times I'm gonna have to close and roll this position, which I have a video on as well. I'm gonna link it in the description about rolling options, but 21 delta. Okay, this looks good to me. Oh, wow, guys, look at that implied volatility. Okay, so look, the implied volatility is really important. Just so you understand, the higher the implied volatility, the more premium on the option. The more premium on the option, you should be smiling because that means more money for you, okay? You're gonna have more money in the bank account when you sell options because when they're worth more, you collect more. If the implied volatility was really low, that wouldn't be that good. Basically because then the premium would be super low and then there would be no money. So a lot of people are like, oh my God, there's a lot of volatility. Well, actually, as an option seller, I love volatility. Like it's literally like the best thing ever. Like during the crash in like 2020, I actually ended up making really good money on Tesla. I spotted it at a low price, got in, and things were great. But look, so coin, 96 implied volatility. I'm gonna go ahead and sell this. Okay, so I'm gonna collect $120 here. Now, if you just sell a call option, that's gonna be an unlimited loss. I would never, ever recommend just selling a call option, okay? That's awful because you have unlimited loss. That's very risky. And also, most brokers won't even let you do that. I've never sold a naked call option because, yeah, that's not good at all. I've never seen anyone, any professional do it either. So just don't do that. Instead, what you're gonna do is you're gonna sell one call option. Now you're gonna go ahead and buy another call option, okay? This other call option is gonna protect you, okay? It's needed for protection. I typically stick to about $500 difference in strike. So from 55 to 60, okay? That's $5 difference, meaning then you only need to put up like 500 bucks worth of collateral. So I'm gonna go ahead and buy this, okay? Now you will see that my max profit is $51, my max loss is $449. Again, it's really 500, but because I'm collecting about $49, it actually lowers my collateral. So rather than 500, it's only 450. So here it's about a 10% return, okay? 45 divided by 450 is actually 10%. So again, 10% a month. Or, you know, basically, I'm making like $4,000 on $40,000 in my portfolio. But when I looked at the collateral, it was actually lower than that. So I'm actually making more than 10% at the moment. And that's because I'm picking really good implied volatility options to play. But anyways, you can absolutely make a few $100s even if you have a couple $1,000s in your portfolio. Oh my God, just $2,000 could literally make you $200 in a month. Then if you do that consistently and you keep adding money to your portfolio through your W-2 job, your business, or whatever wherever you're generating income, you're gonna build a portfolio from a small one to a medium one. And then I'm gonna show you how to build it to a large one, okay? But even if you have a small one, I think the Discord is still perfect for you. But anyways, this is not the point to join my Discord. The point is that you can make a lot of money with options very consistently. And this is the way I do it. I focus on consistency. I hate when people just go and buy call options and go buy put options. And they're like so happy one week, oh, I made 3,000. And the next week they're down 2,900, okay? And they only made $100 in 2 weeks. It's like, yeah, that is not consistent. That's not the way I like to trade, okay? This is the way I like to trade. Look, $51, putting up $449. Actually, you know what? You know what I'm gonna do? I'm just gonna prove to you that I'm not just showing you some stuff. I'm just gonna actually go ahead and execute this as well. So I'm gonna go ahead with 5 contracts. Now, take a look, because I typically don't actually execute on this YouTube channel because I like to save all of that for my Discord, but in this video, I'm actually gonna execute this. But check it out, this is really important. Look, it says low fill likelihood. That's because I'm going right in the middle, and because I'm dealing with 2 options, I do have to deal with the bid-ask spread. Here's the bid-ask spread. Here's the bid, and here's the ask. So here's the problem with options, okay? It's not necessarily a problem, just you have to understand this, okay? If you wanna go ahead and sell, you're not gonna sell it at 80, okay? Doesn't mean you have to sell it at 67, but it's somewhere in between, okay? So the more options that you combine into a single position, you are kind of losing money, even if it's completely free, because you're always dealing with the bid-ask spread, okay? Who's actually collecting 80? Well, that's the person on Wall Street who is a market maker, where I used to work actually on the New York Stock Exchange when I was like 19 years old. I was on Wall Street. But these guys are making the money, okay? They are creating liquidity. They're the ones that are helping us retail traders or even algorithms trade, but it's going to be somewhere in the middle. Okay, so again, so bid is 39 and ask is 68. I'm gonna have to go somewhere in the middle. So actually, just for example purposes, check this out. If I go 0.54, this has medium likelihood, but in my experience, it actually typically doesn't fill. So let's go to review order. Let's submit. Maybe it'll go through, but I actually am doubtful. Let's see. So I just submitted it, and as you can see, I knew it. It says medium likelihood, but honestly, it's like a low likelihood. So as you can see, I did not get filled for $54. It just didn't happen, and that's fine. I didn't really assume that. Me personally, I already knew that, like 99% that's not going to happen. So what I do is, rather than going in for 54, I just go in for 0.5 right away for $50. Okay, so I'm going to review this. Now, to me, this is a medium likelihood of getting filled. I would probably say I'm going to get filled if I wait a little bit. And here, as you can see, I'm still not getting filled. And that's the thing with options. You have to put in a little bit lower price to actually get filled. And this gets worse with, more interesting strategies that are smaller account strategies. That's what is hard about growing a smaller account. It's very possible to do it consistently, but when you're doing strategies like butterflies and stuff like that, it's really, really hard to manage, which is why in my Discord community, I'm really not focused on butterflies. I'm really focused on spreads. Because look, I'm going down, but I'm not going down that much. See, I got filled for 49. I only had to go down by $1. Actually, I got filled for 50, as you can see. Really interesting. So that happens quite often. But anyways, check it out. Made 250. My collateral is 2,500. So I made 10% return in 1 month. So I'm going to go ahead and just hold this position. Now, let's talk about managing this position. Okay, let's talk about what you should do, how to manage and actually close this position. Check it out. If you've done your research, if you've picked the right stock, which I do, right? Before I do any stock, I've already done my fundamental and technical analysis. That's what I've done before even making this video, okay? So for me, when that happens, I'm right even more often than what the delta is, okay? So if the delta says 20, I'm actually gonna be having an edge as a trader because I've done my research ahead of actually trading the stock. So for me, even when the delta is like 10, I should be winning 9 out of 10 trades, but I'm winning 95 out of 100 trades, okay? So I'm doing much better than what the delta says because I'm adding research on top of whatever the delta is just saying, okay? So now take a look. Ideally, you don't manage the position. That's the secret, okay? The secret is you do such a good job that the option stays out of the money. So for example, look, this option is expiring tomorrow. Coinbase is under $54 and I don't even have to do anything. That's what happens like 9 out of 10 times. So I don't have to do anything here. Look, Tesla 205, 210, I don't have to do anything here. Look, it's up 97.2%, okay? If I go down, Airbnb, it's up 58%. Now here in this position, it's up 58% because this option is not expiring on the 9th, it's expiring on the 16th, so it still has time to expiration. And because it has time to expiration, there's still more time value here. That's why it's not at 90%, it's at 58%. But I'm pretty sure that next week or in about a few days, this is gonna keep inching up towards 80%, 90%. So that's gonna end up decaying 100% for me. And I don't have to do anything. I just let these options expire worthless. Okay, here's 98%. This one is 98%, even though it does expire on the 16th. Okay, again, 69%. That's going to keep inching up. Now, Adobe for me is actually down. This is one of my losing call credit spreads. Again, I'm not perfect, guys. I make mistakes too. But guess what? This is not a mistake. It is not a mistake. Let me show you why. Okay, so Adobe 355, 360 call credit spread. Okay, I have 12 of these. But check this out, 355. Okay, remember that number. Remember 355. Okay, so look, if I open up Adobe right now, you will see that this stock is under 355. So although I'm down in the position, to be honest, I am not concerned because what's going to happen is this position is going to end up making money so long as Adobe stays below 355. It's actually insane to me that I'm down and this stock is so out of the money. The reason why this is happening is because implied volatility is really high, but guess what? If I open up this position, you're going to see that this is going to start decaying really fast. I'm going to start making a lot of money very quickly as every single day goes by because this is an out of the money option. Let me go to the calls that I've sold. So 355 call that I've sold. I'm just going to open up this specific leg of the option. And I just want to scroll down. I want to show you that if I look at the theta, 0.78, this option is losing about 0.78, which, since each option is 100 shares, it's losing $78 a day. Okay, so this is going to start making me a lot of money very, very fast as this option approaches the 16th in about 8 days until expiration. Every single day, this is going to make me a lot of money. So instead of being down 8,000, because this is 12 contracts, and I'm just telling you it's about $78, right? give or take. Options are not linear, they decay exponentially, so it's not linear, but hey, just check it out just for easy purposes. Let's say 78 times 10, it's about $780, $800. I'm technically making about $800 a day. Now, because there's 8 days, $800, it's going to increase. It's going to be like $800. The next day, it's going to be like $820, $840. It's going to keep increasing, and this is going to just decay down to zero so long as Adobe stays below 355, which, come on, it's going to stay below 355 most likely. It's like $20 out of the money. So anyways, my only losing position right now as a call credit spread, I'm not worried about, and the way I'm managing it is, again, I'm not managing it. I'm just leaving it alone. It's going to decay, and it's going to go into the positive pretty soon. It's just showing a negative now because of the implied volatility, because there's still 8 days left. So anyways, this is going to decay, and it's going to make me really good money. So anyways, let's go to the next position. That's a put credit spread. That's not a call credit spread, but I'm up on that anyway. Here's Coinbase, 80, 85, and that's up 96%. Let's see. Okay, Tesla. Okay, this is controversial. I know a lot of people are like, oh my God, you're short Tesla and you're not a fan of Tesla right now. What's wrong with you? Well, hey guys, everyone else likes Tesla. Everyone else likes FTX. I'm doing the opposite of what everyone else does, and my account's also bigger than most people, besides, you know, some of the hugest people like me, Kevin. Obviously, they're wealthier than me, but that's because they're more talented at making videos than I am. But, you know, I stick to honesty, you know, and hopefully that comes back and pays me back in the future. But okay, so look, I am not a huge fan of Tesla at the moment, okay? I like Tesla long term, but in the short term, you know, I think Elon Musk is just running around doing his crazy stuff. And yeah, anyways, I'm making money, and everyone in my Discord is making money by doing call credit spreads on Tesla. 280, 285, up 97%, 370, 380. I opened this up a long time ago, so we're up $500 on that. I'm actually doing iron condors as well, and I'm probably going to make another video on iron condors. I do have one. It's a little bit older, so you should type invest with Henry iron condors if you want to see a video on that. I do love iron condors. I should be doing a lot more of them. Just the thing is with iron condors, they're a little bit harder to manage, but they're amazing small account strategies, and I like them for big accounts as well. Here's the coin call credit spread that we just opened. It's showing a $15 loss, which again, don't look at that. It doesn't matter at all. Just wait until expiration. And 9 out of 10 times, you're going to be in the profit. Now, what happens when you're not in the profit? Well, here's the thing. If Coinbase goes up to like $55 per share, okay, then I'm going to be looking to actually close this position. Doesn't happen often, but when it does happen, what I'm basically doing is I'm going to start thinking about closing it. And if it goes to $56, I'm going to reevaluate the stock, the fundamentals, the technicals. And if I think the stock can keep rising, then all I'm just going to do is just close that position, take a loss, and just keep trading. It's not a big deal when this happens like literally 5 out of 100 times. You just close that position. You can roll it, but rolling spreads is a lot harder. And on Robinhood, you're not actually able to do that in one shot. You have to manually close that position, and then you can open up a new one manually again. So let's say that Coinbase goes up to 56 and there's only a couple days until expiration. If it actually goes up, okay, so look, there's two scenarios, okay? If it goes up to 56 and there's a lot of time left, you leave it alone. If it goes up to 56 and it's really close to expiration, go ahead, close that option out, close that spread out, and then open up a new one. Do like 60, 65 instead, okay? So you can roll and roll higher, okay, to protect yourself. That's basically the strategy that I use. And then I have another Tesla call credit spread here, up $410. So basically, call credit spreads are amazing for growing a small portfolio. You should absolutely utilize them. And the way you manage them is by just leaving them alone. If you've done your research properly, or if I've done it for you, like, you know, my Discord community when I just post trades, then you don't have to really do much. You just open that position and you let it expire worthless 95% of the time. So thanks for watching, and I'm going to have some links for you down below for more videos that you can watch. And make sure that you watch this video if you want to be a lot more consistent with your option trading.